Well, we had an interesting week in the market and not a lot of economic news. The interesting part of the week in the market for me was earnings. We had better than expected earnings at IBM, better than expected earnings at Google, not too good at Microsoft, not too good at Intel, and Apple was the big story, coming in at 8 point something billion dollars worth of earnings, a blowout earnings quarter. And then the stock tanked because the sales growth and earnings growth were a little bit under expectations, and so everybody's kind of like panicking out, which I find interesting because a few months ago everybody was panicking in Apple. Isn't that typical? Um, so the earnings week was quite interesting, but if you look at the whole season so far, the earnings are beating expectations. And if you remember right, several weeks ago, before earnings season started, I said that the expectations earnings were so low. It looks like to me it's going to be fairly easy for the market to beat those earning expectations, and that should be good for the market. And we have seen a rally in the market, and it tells you something about how markets work. Markets don't only work on the actual earnings and actual economic statistics. A lot of it is emotion. A lot of it is how the market sets itself up, or the experts set up the market, depending on their expectations of what the market should do. So you have different components of when you're investing. It's not just all about earnings. Long term, yes, it's about earnings for corporations and earnings, economic growth, and the market prices will reflect that. But in a shorter term, there's emotions involved. There's fear and greed involved. There's all kinds of things interfering with stepping back and trying to figure out, well, okay, should I be in the market? Should I own that stock? Take the example of Apple. The emotions drove that thing up faster than it should. It's still worth a lot more money than it's selling at. And then emotions drove it down further than it should. But it's still worth a lot more money than that. There's really been no change in Apple other than its sales growth has been slowing. Well, you kind of have to expect that from the world's largest company and a company that's going to be attacked by every other competitor out there. So you have to expect it. You just don't really expect and don't want it, especially since we own Apple on our managed account. You don't want it to be whipsawed around. I mean, you just want it to reflect its earnings in the long term, and it will eventually reflect. It's, the PE ratio now below 10, and it's still growing 20%. It should bounce, but it may not. You never know. Anyways, in the economic side, they're really good. There's two good pieces of news. One was really surprising was the unemployment claims. If you remember right, unemployment claims last week fell sharply, like 27,000. And so the expectation got down to like 335,000 or something. Yeah, 335,000 claims. Anything under 350 indicates that the job market is getting healthy, pretty good, starting to pick up. So it was down to 335,000. So, the site was there, but everybody assumed, well, maybe that's Hurricane Katrina, maybe it was a holiday season, and the expectation for this week was to go back up to about 360,000. It fell 5,000, down to 330. No one expected that. That's kind of hinting at a better job market out there, a better economic outlook out there, because more jobs, more people earn money, they get back to work, they spend it, economy grows. Not a bad sign. The other positive sign was the leading economic indicators report. Leading economic indicators. It was up 0.5%. It was expected to be up 0.4%. But they revised last month, which was initially reported as minus 0.2%. That was a little bit worried because remember, it's a leading economic indicator, so it looks forward. And they revised that to being flat last month. So those were good. To detract from that, existing home sales and new home sales both fell. New home sales fell 7.3%, as reported yesterday. So housing market is on the mend. There is a trend of improvement here. Just 1 month doesn't mean much, but it was down for the 1 month. So it's not robust by any means. Still got to stay with the markets on the rally mode. At some point, it's going to pull back. We all know that. It's going to do that. I just can't tell you when, but it's going to happen. But stay with it.
The Invest Talk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's Invest Talk talking points, plus news of upcoming Invest Talk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.